Happy weekend, traders. Trader Geek Sam here with your weekly review and preview for Sunday, March 1st, 2026. Coming out a little bit later than usual. Apologize for that. But lots going on this weekend. And unless you've been kind of hibernating, you know what's been going on around the world. And we have the futures open at this point with the ES or the S&P futures down about 1%. So are the NASDAQ futures and the Dow Jones futures down about 1.17%. And taking the worst of it on the equity side are the Russell 2000 futures down about 1.5%. On the other hand, crude is up 7.5%, was up a lot more than that, was up to 75.33. Gold hitting 5,400 resistance right now, right at resistance. That's up almost 3%, and silver up about 3%. With the VIX up a mere 6.81%. It was up a lot more than that. We'll see. It's still early in the evening to see what happens. And same with the bonds. The safety trade, they're trading up a bit, but much less than they were early on in the early going. But we'll see if we get more weakness here. But most equities trading, the 24-hour trading doesn't start until 8 p.m. Central, about an hour from now. And we're sure to get some emotional selling there when people can dump certain equities that are available for trading 24 hours. Well, so much for that preface, whatever you want to call it. Let's take a look at what happened over the last week, month, and year to date since we just concluded the month of February. So we're 2/3 into the first quarter. And taking a look at Monday, we have the VIX up the most, 6.6% on Friday. Not a great day. Gold rallying 1.31%. I wonder if someone knew something about what was going on. TLT still rallying up 0.6%, and aggregate bonds up 0.2%. With Bitcoin, couldn't even hold more than a one-day rally, down 2.76%. Microcaps down 1.75%, and so were the Russell 2000 or the small caps. Magnificent Seven down 1.48, and the Dow down 1.05. For the week, we had the VIX up, and of course, and then gold gaining 3.25%. Taking back most, at least as of this evening, most, if not all, that decline that we had earlier in February when we got that correction. TLT up 1.5% last week, and microcaps still eking out a 66 basis point gain. Bitcoin in the cellar, along with the Mag 7 names, and as you probably realize, the Mag 7 risk off, and same goes with the Bitcoin, kind of a correlation still persisting there between the Mag 7 and the Bitcoin. And for that matter, all the tech stocks. Dow Jones down 1.3%, small caps 1.2%. So nothing really escaping in terms of equities, except the micro caps, surprisingly, up 66 basis points. For the month of February, now concluded, VIX was up 22%. Did we tell you there would be volatility? Gold, despite the correction, and that might have been a late January correction rather than February, if I'm got my dates wrong. 13% on gold. TLT up 5%. That's a lot for the 20-year bond, and mid caps showing the most in favor of the capitalizations, up 3.818. Even the dollar gained some ground in February. How about that? 20, 30, 1/3%. Bitcoin faring the worst, down 16%. Magnificent Seven losing 7 over AI angst. And so the Qs lost 3% in the month of February. SPY losing 1.35% as well. So VTI total market index losing 1% here. So all in all, not a great month, not a bad month. So the sideways action persists. And if we look at the major markets year to date, which is essentially quarter to date, VIX volatility, did we call it or what? Up almost 33% since the start of the year. And gold, 22% so far this year after, I think it was like a 68 percent gain last year, not a 65% gain, and still going. Mid caps, the strongest of the major markets, 8.2%. Micro caps, 6.65%. Even IWM still up 6.2% despite the recent weakness. And the 20-year bond up 4.2% as interest rates start to ease a little bit. And we saw the first signs of a sub 6% 30-year fixed mortgage, which is good for home buyers this time. DIA, that's the Dow, up 1.9, and aggregate bonds 1.5. Worst of them, Bitcoin down 1/4 of its value year to date, and the Magnificent Seven down 7. Qs are off 1.14% on the year. So we are down so far into the end of February. Total market index, because it includes all capitalizations, up 1.04%, whereas the SPY eking out about 60 basis point gain. The dollar is up slightly on the year, as are high yield bonds here. So that's kind of the big picture of the major markets year to date and quarter to date. On Friday, when we switch over to sectors, telecommunications sector, the strongest up 2.03%, XLV, healthcare up 1.77, energy up 1.58, sure to be up even more tomorrow on Monday. The XLP returning to its 52-week high, up 1.29%, and utility. So very defensive mix up here, except for the telecommunications stocks, very defensive. And on the bottom, financials were getting hit a bit hard. XLF, as was the KRE, XLK losing 1.6%, not surprising given the tech weakness. And retailer stocks down 0.8%, though I believe even Costco and Walmart were up on Friday. Taking a look on the weekly chart, we got utilities leading the way, 3%, staples up 2.41%, and healthcare up 2%. At the bottom of the list, financials losing 2.02%. Now, wasn't that the same amount? No, 2.04% on Friday. So I guess that entire weekly loss came from Friday, and we were neutral the rest of the week. XLP 2.41, and healthcare 2.16. XLK losing 1.5 and transport's losing 0.75 point. Taking a look at the sectors on the current quarter and year to date, or did we not do monthly first? We just closed a month. That's February. Utilities up 12%, as were energy stocks, telecommunication stocks, and materials. Real estate bouncing back 0.03%, and the staples showing their strength this month, up 6.5%. At the bottom, financials losing almost 5%, technology and consumer discretionary, which is mostly comprised of Amazon and Tesla. So clearly a risk-off month when you have financials, technology, and consumer discretionary at the bottom of the list, and communications, which is basically Google and Meta, down 1.31, and retailer stocks down 1.1%. But don't tell that to Costco or Walmart, which are also part of the staples group, and those are doing pretty good. Metals and mining not keeping up with the strength in gold, very much lagging on the month. And here for the year to date and the quarter to date. Energy leading the way so far this year with the materials up almost 18%, as were telecommunication stocks. And there are those staples again, up 16%. There's the metals and mining showing better strength over the quarter, but February wasn't such a great month for them. Industrials making new all-time highs as well, XLI 14%. And you have the utilities up 12%. So kind of going with the safety trade there. Transport's up 9.76%. At the bottom there's the financials, there's the technology, and there is the discretionary, with communications just barely up, and retailer stocks up 1.98%. Taking a look industry-wise for the month, we'll just skip over to that. GDX, that is miners, for the month up 23%. Exploration and production 13%. Robotics up 8.27%, and defense stocks, not defensive ones, up 5.5%. ITB, home builders eking out 4.71% gain despite weakness last week, and TAN, the solar stocks, up almost 3%. At the bottom of the list, this is China Tech, down 12%. China stocks just can't seem to get out of their own way. Cyber stocks, with the threat of AI, showing a lot of weakness. Cyber down almost 10%. Software stocks looking awful for the month, but did have a slight recovery into month end. Blockchain stocks going along with Bitcoin and the rest of the cryptos up down 8%. Internet stocks, FDN, and then surprise, cannabis stocks are in the doghouse as well. Quarter to date and year to date, GDX up 35% after a stellar run in 2025. XOP 22, ITA, defense stocks. We'll see if they sell those defense stocks tomorrow or they jump after the invasion this weekend. Robo stocks up 13%, and we have the semiconductor stocks holding up very well. TAN, solar stocks up 12%, ITB, home builder stocks up 11.65. So really good performance from the home builders, and no doubt that interest rates are a factor there. XBI holding its own up 4.46%. Those are the biotechs. But at the bottom, no big surprise. Software stocks losing 20% on the year. Cannabis stocks still in the basement. Cyber stocks losing 12%. Some of those I think are pretty much overdone. Cyber or CrowdStrike and Palo Alto Networks are looking like they're coming into good support. FDN, internet stocks down almost 10, and then KWeb, that's the Chinese internet stocks, down 8.78 year to date. Blockchain stocks down 6%. So not a good showing, kind of half and half, with a little bit more. The ones that did well did better than the ones that did badly, given that we have 35, 21, and 13, and here we have 19, 17, and 11. So a little bit better. But looking at the Mag 7 for last week, everyone's a loser with NVIDIA after an outstanding record-breaking quarter, still losing 6.5%. I mean, is Wall Street a crybaby or what? You give them everything they want. They beat on every metric. And just because Jensen didn't say the words they were hoping to hear, whatever those were, the stock took it. But quite frankly, they rallied it ahead of time. So it's not a surprise to see NVIDIA lose ground. Tesla losing 2.25% last week. and Meta down 1.14%, as was Microsoft. Microsoft trying to recover, Google still above that $300 level. On the month of February, everything is a loser, with Amazon the worst, 14%, Google losing almost 10%, Meta 8%, Microsoft 7%. Feel like I should have 6.54 here. Tesla 4.58. Apple doing the best, given, surprisingly, since it had a really good couple of weeks, but Friday gave back quite a bit there. On a quarterly to date basis, none of the Magnificent Seven is in the green, but Google is the closest to being in the green, as Meta down 1.8%. But Microsoft, because it's in the software category, losing almost 19%, Tesla kicking off 10%, and Amazon 9% after earnings, as was NVIDIA. So not so magnificent so far for the year, and we'll leave it right there. So let's take a look at the charts. And for those of you new here, I'm a top-down trader. So I look at the monthly, the weekly, and the daily charts. And I look at the SPX, the NDX, and the Russell 2000, the small caps. So on the daily chart, we have a bearish chandelier, which is a kind of a volatility stop. But we have a bullish PSAR. So on Wednesday, the market rallied, although it really seemed like a weak rally to me. We couldn't even come up and take out this candle here, or even take out, that candle is the one. But we did take out that PSAR dot, that's parabolic stop and reverse. So that's positive right now, but down below 67.82, and we tripped that to the downside again. So Monday was weak, Tuesday recovered, Wednesday was a nice rally, and it really just seemed like they were front running the good news that everyone knew was coming from NVIDIA. It seemed it was all over the place. And then Thursday, NVIDIA, the reaction took it down, but a long tail here, and then downside on Friday after the hotter than expected PPI report. So bouncing here off the 100-day again. We'll see how well this holds, but right now, based on the futures, looks like S&Ps would open down 1% at the open tomorrow. We had the second week. We don't see last week's options implied expected move here, but it was the second week where we never touched the upper edge or the lower edge of the expected move. And last week, we did have a 144-point expected move. So it's very rare to get a third week where we never touch the lower or upper edge. And this week, as you can see, are plotted up here and down here. And this is another 143, 144 points expected move. So the lower edge at 67.35, upper edge at 7,022. So as the week starts, if the futures are any indication, we're going to come close to tagging this. Well, at least get halfway there, and we'll see if we close below this parabolic stop and reverse. MACD was looking good, looking to the fast line to flip over the signal line, and it did, and now it looks like it's going to come right back down again. So we are down, fighting it out right at the zero line. Relative strength index is just neutral right at the 48 level, neither close to the overbought or the oversold level. And we are below this 50-day moving average on the SPX. And like I said, bouncing off the 100-day, but that's going to give way on Monday. Looking at the weekly, we still have a bullish chandelier, bullish parabolic stop and reverse. So that's a positive. And we got, what do you know, another doji on the weekly, holding the 8 weekly EMA. but we've been going sideways for what, weeks? If you go back to the week of 10/27, we started out with the doji. We went down, we went up, we went down, we went up, we went down, and we're just going nowhere. So the Chop City MACD is still on a sell signal on the weekly, though still above the zero line, and we're closer to overbought than oversold on the RSI. Here's the 21 EMA. The week before last, we bounced off of it, but an indecision candle. So anything above 69.52, we could get going, and then anything under 68.15, and we could head down. So odds right now favor going down, but this is still a bullish chart. We're basically digesting this huge move off the bottom, coming back to April of last year. Coming to the monthly chart, we did make a new all-time high in January, but not in February. And here we have another doji. We did stop one-time framing, and what that means is all the way up until here, we didn't violate the low of the prior month, but that was a long tail, and then looked like we were starting to one-time frame to the upside, where the lows of 1 month did not violate the lows of the prior month, but we did here. But again, it is a doji. Very bullish monthly chart, nothing to complain about here. MACD is still solidly positive, and we have a red hot overbought on the monthly, which is what you want to see in the bull market. So monthly chart definitely goes to the bulls. Weekly chart is starting to, it has been bullish. It still is bullish, but it could get to a little bit neutral. And then on the daily chart, call us a choppy mess, definitely neutral. Nobody is winning here. You go back 6 months, we haven't made any progress. And depending on who you ask, the lack of progress is either to the bulls' advantage or the bears' advantage. And if you ask me, every time we try to break down, we come back. So that argues for strength. So definitely, this is a bull's market to lose. After all that, taking a look at the NASDAQ, bearish chandelier, bullish PSAR, same kind of deal. We knocked out that bullish PSAR on Wednesday. Tried to get over the 50-day, but couldn't quite do it. Looks very similar to the SPX. We are below the 20 EMA and right below the middle Bollinger Band there, and below the 100-day. So definitely, whoops, get rid of that. Definitely weaker than the SPX. And again, just going sideways, going nowhere. This is another index where we did not touch the upper or lower edge of the options implied expected move. And here we are again with MACD is positive and probably will flip negative tomorrow if we continue to get the weakness. Right now, the futures on the NASDAQ down about 400 or 500 points, and is not going to do anything good for this chart except head close to the options implied expected move for this week. On the weekly chart, sideways action. We're still in the spot. We closed at 24,960, and here we are over here, 24,785. This candle, 24,221, our closes. So all in all, just sideways choppy action. Haven't made a new all-time high since October, and we have definite negative MACD on the MACD sell signal, but still above the zero line. And we have a neutral RSI, relative strength index here. So just sideways. You can call it sideways to down here. Looking at the monthly, Here we are, 1, 2, 3, 4, 5. You can see the sideways action in the monthly chart. Doji, long tail here, and you could call this a doji. In any case, those are indecision candles, and we have the MACD here looking to flip negative. Hasn't done so yet, but this is a monthly chart, takes time. And we did close right at the 70 RSI level, given the end of the month. So definite bullish chart on the monthly, bullish chandelier, PSAR. On the weekly, we have a mixed bag here, sideways. And, you draw a trend line here. We have a weekly that's in a downtrend. And then we have a big old mess on the daily. And the advantage here goes to the bears. This one's more neutral, and this one's bullish. So call the NASDAQ neutral to bullish at this point. One last one for you, Russell 2000. Here we have a bearish chandelier, bearish PSAR. So two different types of stops that are bearish at this point on the daily. And ever since we made this new all-time high on the 22nd of January, we've come down, we've gone up, we've come down, we've come up, just a choppy mess. And looks like we bounced off the 50-day, but that looks to be taken out on the open tomorrow, given the weakness in the small caps, which is about 1.5% at this point, coming into Monday's open. MACD is definitely negative and was not even able to try to cross over the fast line over the signal line. But we are above the zero line on the MACD, and we have a relative strength index that's just middling, right in the middle there. Coming to the weekly, bullish chandelier, bullish PSAR, that's a positive. Going sideways on the weekly. Doji wins. And a MACD that looks like it's about ready to flip negative. It's just been another choppy mess here. And we did close right above the 8 weekly EMA. And down here we have the 21 EMA. So we could have a trip down there. And that's just right at the bottom of this week's options implied expected move. Looking at the monthly, big topping tail on the February candle, same here with the January candle. Still bullish. MACD is still positive. Have not really made any progress towards getting overbought above the 70 RSI level. So call this bullish, call this bullish, call this neutral. So it's still bullish, but not by much. So all of these charts really have an advantage by the bulls, and it's their advantage to lose. Taking a look at what the VIX did, just to tease us, we closed at the 1986 level, just right under 20, and the craziness just persists. And so here's the last week. On Monday, we got as high as 22. Tuesday, we got as high as 22. This was 22.04. This is 22.08. And then came in on Wednesday on that rally, and right back there again on Friday. And we did hit 21.74. So lower highs, but we are still above the 200-day moving average on the VIX. So that's kind of like if you had the SPX below or above the 200-day line. This one's over the 200-day line. And thankfully, the S&P 500 is not below the 200-day. But in this configuration, it looks like the 200-day wants to kind of flip the slope a little bit positive, but where's the 21-day? So we have also a 21 EMA on the VIX that's above the 200-day. So those are two feathers in the bears camp, at least on the daily chart. We still have a MACD that's negative, but could flip positive. And I don't look much at the weekly charts of the VIX. They don't tell me a whole lot, but other than the fact that we've been in this range for a long time with little spikes up, and we haven't been anywhere in terms of volatility. Taking a look at the VIX and what I like to look at in terms of the pricing and the options, we'll call the close at 20 VIX. So if we look at the 21 calls, see what they were saying, at least as of the close Friday, if you were bearish on the market, you'd buy a call and you'd pay $1.90 for it. And if you bought a put at 19, another dollar, you'd pay essentially 92 cents. So the calls were saying something, but being only 2 times the cost of the puts. Again, we're looking equally out of the money. So the bears had the advantage here on the pricing of the VIX options, albeit not a big one. I sometimes see this as much as 10, 15, 20 times pricing difference. So that told me on Friday that whatever decline was remaining, it was not that big, albeit 2x. Looking at the VVIX, and let's switch over here to see where that ended up on Friday. At the 110 level, this is the level where I start to really pay attention to it. VVIX is a measure of hedging with VIX calls, and anything under 100, I'm not terribly concerned. Between 100 and 110, it gets my attention, but over 110, this is a more serious environment, and I imagine that tomorrow this will be up near the 115 to 120 range. So this is an elevated level for the volatility of the volatility. And then finally, I also looked at the structure of the VIX contracts, which to see if there's any normalization or backwardation happening. And so we did have a VIX that or a VIX future up, and with a VIX at 20, all of these contracts are pricing out higher than the current contract. So the normal backwardation or normal contango exists here, where you expect higher volatility as you go out, but you do see some, here's 2020, 17. It's a little less than in March, but we'll see what happens with the volatility up just about 8% right now, whether we see any serious spot VIX being higher than the future VIX futures. But so far, we're seeing normal term structure in the VIX contracts. Taking a look at the options implied expected move for the SPX, and it's about 143 points, give or take. My guess is we're gonna once again use up all of this, and it doesn't mean that we have to touch the upper edge or the lower edge, but I think we will see that this week, one way or another, the upper or the lower edge hit for the week. And I'm going to get to the news, but let's look at the NDX options implied expected move. And that's about 651 points. And then finally, the RUT. Which the futures are down 40 points at the moment. And we're expecting 78 points for the entire week. So we might have half of that on the open come tomorrow morning. So that's the options implied expected moves. Taking a look at what's going to influence the expected move, we have the, let's see if I can make this bigger without running off the page. economic reports and Fed heads gabbing. We do have some economic reports tomorrow. End of the month, auto sales are usually the first business day of the month. ISM manufacturing and manufacturing PMI. Tuesday, no economic reports, just Fed heads yakking it about. Wednesday, because this is the first week of a new month, we have ADP employment report at 8:15, and then services PMI and ISM services. And we have everyone's favorite, the beige book. Thursday, typical weekly jobless claims and productivity, import prices, and Michelle Bowman speaking as Mr. Austin Goolsbee in the evening. Friday comes our monthly unemployment report. That's unemployment report coming up. And so they're forecasting about 54,000 jobs, and we know how well that has worked out. Unemployment rate, wages, and hourly wages, and of course, wouldn't be complete without more Fed heads yakking up. So the big ones being the jobless claims and the employment report this week, along with some ISM manufacturing and non-manufacturing reports. Coming into the home stretch, now that we are into the last month of the quarter, we still have some earnings reports, and we're mostly going to see, my guess is, retailer stocks. We do have Norwegian Cruise Line before they open on Monday, and Riot, Credo, CRDO, MongoDB among the knowns. And then Tuesday, Target and Best Buy before the open, Box after the open, CrowdStrike in the cybersecurity space, GitLab, and what else? Broadcom Wednesday. It's going to be an important one for the chip space, and Rigetti in the quantum computing space, Viva, Okta, all these familiar names. And Thursday, more retailer. Kroger in the morning, Costco in the evening, JD.com, Chinese, Victoria's Secret's more retail, and yeah, that's about it. GoPro's still a company, eh? All right, so winding down earnings season, which has mostly been pretty favorable. And one last thing here, a chart put out by Kirk's Opportunity. You can see here after military action, kind of get an idea what kind of drawdown that we've had since the year 2000 after some type of military strike. And you can see 1 month later, the average 2.7%, median 2%, 2 months, 4%, 3%. So for the most part, military action has had a very small effect on the markets unless it dragged on for a long time. And obviously, if the attacks and the counterattacks continue, that will weigh on the markets. But for the most part, the market hasn't cared about much action here in terms of geopolitics, at least not for a long time, unless we have a prolonged war and it rattles people's sentiment about owning stocks. In any case, still a volatile environment. This is the bears market to give up. We still have a lot of choppiness. We do start to see some positive seasonality in March. All I can say is if you're trading, day trading or doing short-term trades, you can't trade it like it was early last year, or at least for the first 3 quarters when it was up, and you could be forgiven for a lot of mistakes. Keeping in mind that trading, if you're used to trading in Mag 7 and the tech stocks, that's not where the action has been. You got to flip it up a little bit. You got to look at other stuff, because the Mag 7, as we saw in those weekly, monthly, and quarterly charts, are all down on the quarter. So you got to flip the playbook and start looking at other stuff, energy, materials, It was just saw utilities and uh, obviously the metals are doing well. So be careful out there. It is a very choppy environment, and protect your money, as they say. And I appreciate you tuning in. And if you have any questions for me, I'm on Twitter at Trader Geek and in the forums, Trader Geek Sam. For now, that's it. I will see you next week, and tell your friends about us. And if you have any feedback, let me know. Take care and talk to you next week. Bye bye.